Hey everyone, it's Matt. The epic stock market crash of 2021 right under our nose. Let's get right into this and discuss it. So I'm recording this video in early February 2021, but first let's go back about 1 year ago and bring it back from about a year ago up until present and discuss where we're currently sitting today versus what it looked like last year at this time. So about a year ago, the market was sitting where? Well, it was sitting at all-time highs, and all of a sudden, it reversed from all-time highs and collapsed. As everybody knows, over the course of just a few weeks, it went from all-time highs to down about 30%. Once it pegged the lows, it basically was a rocket ship from there all the way up to where we're currently sitting. For the most part, it has been going up rapidly and very aggressively ever since it pegged those lows. Now, of course, there were some times in there where it kind of hung out for a little while and it based around, but for the most part, this thing has been going higher just about on a daily basis, right? Almost week after week. And of course, there were a couple weeks in there that it kind of came back down a little bit, but as soon as it came back down, it was met with more demand and buyers stepped in and drove this thing continuously higher, which brings us to where we are now in early February. Well, as of late, in late January here, we've seen all of this mania. People buying stocks, driving them up 100, 200, couple 100% in a single day. All of a sudden, the next day, the things fall by 50% or more. Well, what is all of this doing? I mean, what is all this volatility representing? Well, let's think about it a little bit further. First of all, I want to use an example. Now, many people are probably going to think of this and say, oh, you got to be kidding me, you're using this example. But think of 2020. Did you ever go back? Have you ever gone back and looked at charts of 2020? We basically see the same thing happening from 2020. Essentially the same thing. When the market was at a top, there was a massive amount of volatility coming into the market. Huge price swings in stocks and overall in the market in general. Massive price swings. Well, what happened shortly after that? It didn't take long for all that volatility and all of those retail traders to jump in so Wall Street can start unloading their massive positions. At that point, guess what happens? Creating all that volatility, and then guess what happens? No more buyers and no people to back up the price. All of a sudden, the thing starts rolling over, and all of those people who bought near the top don't want to get out. Well, guess what? There goes the price and there goes the market. We're basically sitting on, once again, the same type of situation. The market is sitting up very high, what seems to be going up almost on a daily basis, what seems like 1% or 2% every single day. Is this sustainable? No, it's not sustainable at all. Now, it can continue to run, of course, it can continue going higher. We could look back in 2 months from now and we could be 30% higher once again, right? We have no idea where the top could be, but the signs are starting to appear, right? All of this massive volatility and tons of retail traders buying and jumping into the market lately. Well, what marks a market top? Well, when all of the retail traders start buying and getting into the market, you can pretty much well bet that's going to be the top. When everybody, like everybody and his uncle, jumps into the stock market, that typically marks a market top. Whether it's a major market top that's a huge reversal that will never be seen for years and years, or maybe it's a short-term reversal and a short-term top in the market that maybe we won't see for, another year or two. Maybe the market collapses for 6 months or 3 months or something. And we revisit these levels once again in, a year, 2 years from now. Think of the last market peak. It was in 2007, 2008. We collapsed from there. We didn't see those market highs once again until a year ago, something like that, a year and a half ago. So it took 10 years to get back to the highs. I mean, it took a very long time to get back to the highs of the market. It wasn't even, actually, I don't even think it was a year and a half ago. It was like a year ago that it took to get back to the highs that were previously seen in 2007 and 2008. So it can take a very long time. In that case, about a decade or so, or even longer, to get back to the highs that we saw in 2007, 2008. So again, there's a lot of volatility lately, and I've been watching the markets for a very long time now, and you see the same patterns time and time again. Tons of retail traders jumping into the market, and one of the telltale signs too is when they start buying options contracts, start buying tons of call contracts that betting on prices to be going higher and higher, well, options are incredibly leveraged, and it's one way that many people can get into the market and bet on and take positions and not have to put up a whole lot of capital to get in versus actually buying the underlying stock. So anyway, certainly very interesting to watch. We'll have to see what happens over the coming weeks here, but I wouldn't be surprised one bit if we see some type of a massive reversal and collapse in this thing, like we've been seeing with some of these stocks like GameStop, AMC. You know, we've been seeing these lately being run higher and higher on these short squeezes, and then all of a sudden, a couple days later, they collapse by 50, 60 or more percent. So look out below. That's basically all I have to say. Anyway, hope you enjoyed this. I will continue to keep you posted. I enjoy talking about all this stuff. I wanted to give you some introductory videos, but I will continue to keep you updated with all of this. Enjoy your day, and I'll catch you in the next video. Make sure to hit that subscribe button right down below. Thanks, everybody. I'll catch you later.